So last week, we talked about thinking about the mortgage being a tabletop with 4 legs: credit, income, assets, and the property. This week, we're going to take a deeper dive into the credit piece. So as you may or may not know, there are 3 credit bureaus that we use in the lending world: TransUnion, Experian, and Equifax. Now, there are different flavors of the credit scoring models for each industry that wants to look at credit. So for example, the criteria for a mortgage credit report is going to look at a little bit different information compared to someone applying for an automobile loan, a credit card, or let's say a personal line of credit. So with that in mind, that's why we tend to see different credit scores when consumers pull their own credit. Now, I'm a big fan of consumers having their information because I happen to be a consumer myself. So one of the systems that's used quite often is Credit Karma. Now, this can be a great system, but understand it's more of a ballpark idea. The flavor of credit score from Experian, TransUnion, and Equifax on a Credit Karma report is going to yield a different numerical value than when I pull your credit report as a lender when you've applied for a mortgage. Now, there are some changes that are going to go into place in July specific to medical collections that have been paid in full are no longer going to show up on the credit report that we as lenders pull. So this is a pretty exciting change that I think is going to be great for consumers because it will help their scores be numerically higher than if we pulled that credit report today. Now, it's important to keep an eye on your credit, and there's a number of different ways to do that. So annualcreditreport.com is offered by TransUnion, Experian, and Equifax. Consumer can go in there, pull their own credit report. As well, I'm going to provide a slide with how you can get the credit report directly from each one of those bureaus. As well, you might have a banking app that tells you your scores, but keep in mind that score is going to be numerically different than when you actually make application for the loan. But again, it's great to have that information available so that you know a rough area, a ballpark, if you will, of what your credit scores will be. Stay tuned. Next few weeks, we're going to talk about income and assets. Thank you so much.